Welcome to the deep dive. Our mission, well, it's always to cut through the noise, get you those key nuggets of knowledge from, everything that's happening out there. Today, we're diving into the big blockchain and crypto news from the last week of June 2025. So that's June 24th to the 30th. And just so you know, all our source material is from solid, authoritative English language sources. Okay, let's unpack this because honestly, it feels like crypto isn't just like knocking on the door of traditional finance anymore. It's practically moving in. We saw some really fascinating shifts this past week.
It's quite something. The landscape is just evolving so fast. And this period, it really showed both huge opportunities, but also, new things to think about for everyone involved, a kind of maturation maybe.
Absolutely. Yeah, maturation is a good word. We're going to cover some huge moves by major financial players, really blurring those lines, plus evolving regulations that are actually surprisingly giving some clarity and even some, well, surprising real-world, like physical implications of digital wealth, stuff you might not expect. So let's kick off. One of the biggest stories, I think, came from Robinhood. The investing app everyone knows. They just launched something pretty big for their users over in the EU.
Right, the tokenized stocks.
Exactly. They introduced tokenized versions of, get this, over 200 U.S. stocks and ETFs. And the kicker, it's powered by Arbitrum.
The layer 2 solution.
Yeah.
Makes it faster, cheaper.
Right, which enables 245 commission-free trading. That's the key part. It makes it actually work economically. And on top of that, they also rolled out U.S. crypto staking and EU crypto perpetual futures.
So the perpetuals, those are more advanced, right?
Yeah.
Higher risk, but more flexibility for serious traders. No expiry dates.
Yeah, exactly. But think about that main piece. 245 trading, commission-free on mainstream stocks, but tokenized. I mean, that's a really profound shift for everyday investors, isn't it? Giving them access when markets are normally shut.
Oh, definitely. And it's not just Robinhood reacting to demand. I think it's more like they're actively becoming a gateway, turning traditional investors towards digital assets. This move could genuinely set a new standard. Other brokers might have to follow suit or, well, risk looking outdated, especially to younger investors.
Yeah, that makes sense. And building on that, established players embracing crypto. Like, let's talk Circle. Their recent IPO really highlighted something else that's critical for mainstream adoption: regulatory trust.
Yeah. Circle, the USDC issuer.
Right. They got strong analyst coverage after the IPO, big firms forecasting price targets way up, like above $200. And the main reasons cited were its regulatory edge, its liquidity, and just its dominance in the stablecoin market.
That regulatory edge is crucial. It's not just about feeling safe. It's like a competitive moat. Traditional finance, the big institutions, they need that. It lets them bring in serious capital that would otherwise stay away. It could really cement USDC as the sort of default safe stablecoin for big money. It really makes you ask, how much is that regulatory clarity actually worth in a market that's still finding its feet?
Apparently billions, based on those forecasts.
Seems like it.
And speaking of big names, get this. After a 2-year break, another major player is jumping back in: SoFi.
SoFi.
Right.
They announced a return to crypto for 2025. Plans include blockchain money transfers, custody staking, trading Bitcoin, and Ethereum. The works. So for you listening, what do you think SoFi's return means? Does it say something about how the market feels more, mature or opportunistic now compared to a couple years ago?
It's really compelling timing, actually, because SoFi coming back lines up so well with this accelerating trend of real-world asset tokenization, RWA tokenization.
Right.
We're hearing that a lot. Yeah, Binance reports highlighted it as a major use case mid-2025. We're talking real estate, commodities, bonds. Basically, taking a tangible physical asset and representing its ownership as a digital token on a blockchain.
So like fractional ownership of a building, but on the blockchain.
Exactly. Or a piece of art or dead instruments. It really shows how these, physical world assets are getting a new life digitally. It's a huge bridge between traditional and digital finance. Definitely a trend to watch.
Okay, let's switch gears a bit. From the market moves to the regulatory side. We actually got a really important piece of clarity this week, something many people were waiting for from the SEC.
The staking ruling.
That's the one. The SEC clarified that staking, locking up your crypto on permissionless proof-of-stake blockchains to help run the network and get rewards, that is not classified as securities.
A huge sigh of relief across the industry, I imagine.
Oh, massive. Yeah. It gives much-needed clarity for stakers and really the whole ecosystem built around proof-of-stake.
And if you zoom out a bit, that ruling is It's really significant for the future of these decentralized networks. It takes away a major worry, a major hurdle for people participating. It clears the path for more innovation there. But, while it's great relief in one area, regulators often work like that, clarify one thing, then maybe shift focus.
What do you mean?
Well, we might see them look more closely now at the services built around staking, perhaps.
Yeah.
Or even the protocols themselves. It's seldom just a one-and-done fix.
Interesting point. But there was actually more from the SEC that sounds, well, maybe progressive.
Oh.
Yeah, SEC Chair Atkins signaled that their staff are looking into a conditional innovation exemption.
An innovation exemption for what?
To potentially fast-track on-chain DeFi services, decentralized finance apps built on blockchains. What could that kind of exemption mean? Could it speed up DeFi adoption, let new ideas launch quicker without getting totally bogged down in red tape?
That's potentially big. It does make you wonder, could this be a shift, towards actually trying to foster innovation within some kind of framework instead of just focusing on enforcement all the time? Of course, the devil's in the details, right? How conditional are these exemptions? What's the oversight? There's always that risk of unintended consequences or bad actors trying to exploit loopholes. It's a really delicate balance, growth versus protection.
Right, a very tricky balance. Yeah. And while the SEC might be offering some clarity, it's definitely not all clear sailing globally. There are some serious warnings coming out about the darker side of crypto.
The FATF report.
Exactly. The Financial Action Task Force, the big financial crime watchdog. They warned that only 40 out of 138 jurisdictions actually meet their crypto standards right now.
Not a great number.
Not at all. And they flagged, wait for it, $51 billion in illicit asset flows in 2024 alone.
$51 billion.
Yeah. $51 billion. This flagged as illicit. My jaw just about hit the floor when I read that figure. They're urging nations everywhere to tighten up regulations. Fast.
Wow. Okay. What's really compelling there, I think, is that tension. You've got this incredibly rapid innovation, pushing boundaries everywhere, but then you have this absolute need for strong oversight to stop it being misused. The FATF warning, it just highlights this massive area that needs global cooperation if crypto is ever going to, fully reach its potential and shake off that negative image.
It's like building that super fast highway for money.
Yeah, but realizing you forgot to hire enough traffic cops or even build enough guardrails. That's a good analogy.
Okay, so let's pivot now to the market itself. All this news swirling around.
All right.
What's Bitcoin doing?
Well, Bitcoin's doing pretty well, actually, nearing its all-time highs again. Trading around, what, $107,000?
Wow, 107K. And dominance is still strong?
Yep, Bitcoin dominance remains high. And it looks like steady institutional inflows are still a big driver, pushing prices up. Lots of optimism for more gains.
That continued institutional interest, even at these really high price points, that feels significant.
It is. If you connect it to the bigger picture, those sustained institutional flows, they signal real confidence. It's not just speculative anymore. It suggests traditional finance is really starting to integrate digital assets for the long term, not just dipping a toe in. Maturation, again.
Right. Okay, what about another market dynamic token, unlocks? How do they play into things?
Ah, yes. The scheduled release of previously locked tokens.
Yeah. Tokenomics reports said about $3.3 billion worth of tokens were unlocked in June.
Okay, $3.3 billion.
Which is actually down quite a bit from May, which saw almost $5 billion, like $4.9 billion. So does that reduced amount potentially ease some sell-off pressure?
Generally, yes. It raises that important question. How do these unlocks affect volatility? When fewer tokens unlock in a given period, it means less new supply is potentially hitting the market all at once.
Yeah.
So yeah, it can alleviate some of that downward pressure on prices. It helps stabilize things a bit. It's basic supply and demand, really. Got it. Okay, now for something that, honestly, it really caught my eye. And it's pretty concerning. It seems as digital wealth grows, so do some very real, very physical risks.
You mean the Guardian report?
Yeah. It reported a sharp rise in kidnappings and home invasions, specifically targeting crypto investors around the world.
That's chilling.
It really is. They documented over 231 incidents in just 18 months.
Wow.
And it's apparently driving demand now for physical security services, bodyguards, secure homes, even niche insurance policies just for crypto holders. The idea that, holding digital keys could lead to someone breaking down your actual door, it's shocking. It's a sobering thought.
What's truly fascinating, in grim way, is how this abstract thing, digital wealth, is creating these incredibly concrete real-world security problems. It just highlights that real security for crypto holders now goes way beyond just having a strong password or a secure digital wallet. It extends to your personal physical safety. It's a stark reminder, isn't it, that innovation, especially disruptive innovation, often brings completely new, unexpected kinds of risk. Absolutely, a stark reminder indeed. So, wrapping up, we've really unpacked a week where it feels like the world isn't waiting for crypto to mature anymore. Crypto is actively forcing the world to adapt. Now,
Yeah.
from huge traditional finance players like Robinhood and, well, potentially SoFi embracing tokenization and blockchain, to regulators like the SEC giving crucial clarity on things like staking, but also global watchdogs like FATF sounding the alarm on illicit use. And then this dynamic market hitting new highs, but also showing these unique physical risks tied to digital wealth.
It's a really complex picture. The rules are definitely still being written almost in real time.
Which leads to maybe a final thought, right? And an important question, perhaps, for you, the listener, to consider.
As these digital assets get more and more tangled up with our everyday lives, our finances, even our physical safety, how do we collectively make sure the benefits, the decentralization, the access, the innovation, how do we ensure those benefits actually outweigh these evolving responsibilities and risks, both online and offline?
That's the big challenge, isn't it? Balancing act for the next phase.
Absolutely.
Well, thank you for joining us on this deep dive. Lots to think about there. Until next time, stay curious and keep diving deep.